Welcome to Access a Trader, the #1 community for those who are committed to taking control of their trading in order to achieve success, profitability, and longevity. Thank you for joining us. Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good evening everybody. Welcome to another edition of the AccessATrade.com nightly wrap-up show. Hope everybody is doing well. All I ask is, guys, if you like what we're doing, if you follow us, if you tune in on a nightly basis, all I ask is take a quick second, like the video, and again, I will do my best to help you guys navigate this market. So I'm trying to be as delicate as possible. I really am. I understand there's a lot of new viewers. I understand there's a lot of investors out there. Again, we're a trading channel, but there's a lot of people who look at their investments on a longer term basis. And I just think there's a lot of people who are a little bit fragile this evening, right? Not kind of knowing what to think. And let's go back to 2022, right? Why was 2022 significant? For most of you guys who are trading, you probably started trading the last 5 years or so. 2022 was a pretty big bear market. And the reason why it was a bear market from a technical point of view is because the QQQs, again, we're only going to talk about the NASDAQ 100. The QQQs lost the 50-day moving average. And what transpired through the whole calendar year, the NASDAQ lost about 35%, right? So fast forward, right? In 2023, in around end of January, we reclaimed the 50-day moving average. And what followed after was almost a 2-year rally of epic proportions, right? NVIDIA, Tesla, this, that, Apple, Meta, Microsoft, right? Absolutely nuts. So here we are, right? Here we are. So we are down. This is the first close below the 50-day moving average in quite a while. Okay. Today, pretty disgusting movements. You got 3.5%, almost 4% decline on the NASDAQ, 1% decline on the Dow, and almost a 2.5% decline on the S&P. A lot of people today opened up their eyes and said, well, wait a minute, something's wrong. Well, if you've been watching the video for the last couple of weeks, we talked about where potential technical damage occurred because of this engulfing candle 2.5 weeks ago. And what followed was events that started losing the 20-day moving average, the 34-day moving average. And we started talking about a couple of days ago that rally that we had on Friday. You guys remember that rally that we had on Friday? Was it a dead cat bounce? All it did was trade back to the 5-day moving average, got rejected. And what happened? The next day, we gapped up. We lost the 5-day again. And when you woke up this morning, last night, you had Tesla coming out with earnings. Not good, right? Not good. Initially, when I was recording the video, Google was up. By the time you watched the video, Google was probably down 4 or 5 points. So the NASDAQ just by itself, was getting hit this morning. And the most important part was, I think a lot of new traders, a lot of new investors, they kept on reiterating the point. While the market goes up, buy the dip. The market goes up, buy the dip. And that's true. That's absolutely true when you're in a linear bull market and you're getting massive moves taking out the previous day's channels and you're getting a soft open, right? A nice soft open, light selling at the open. They get trapped into rising support and the market rallies. Today, we didn't see that, okay? We haven't actually seen that in a very, very long time in the last 3 weeks or so since we got this engulfing candle into the 10-day moving average, taking out basically about 2 weeks worth of buying in the process. But today, here's kind of the bottom line, right? Obviously, I know what I think. I know what my plan is underneath the 50-day moving average, but I'm going to give you guys data. I'm not looking to put fear in your hearts. if you're permabull, I'm not looking to do any of that. I'm going to give you guys data. I'm going to give you guys facts, and you can take it or leave it, right? I'm just been doing this for a quarter of a century, right? You could take it or leave it. So this is the first close below the 50-day moving average. Basic technical analysis without anything going further. Above the 50-day, it's bullish. Below the 50-day is bearish, right? What's should bother the bulls today. Doesn't bother me. We had some pretty good moves today. What should bother the moves, the bull case was, you guys remember we were talking about the 50-day moving average a couple of days ago, and I said that they should defend it the first time around. They didn't defend it at all. Guys, this thing went through the 50-day moving average like they didn't even know it was there, right? They didn't know it was there. The next point of interest was this 468 level. I go, surely they're going to defend the 65-day moving average. Didn't put up a fight as well. So that was very, very odd, not putting up a fight on a major battleground area. And now we're staring at technical damage. Okay, this is called now technical damage because we're below the 50-day moving average. Does that mean the market's going to go down every single day? Absolutely not. Especially, again, you have nearly a 4% move on the NASDAQ today. Is there a good chance we get a dead cat bounce tomorrow? Yeah, okay, cool, right? But the most important part is you should be sell biased, right? You should be absolutely sell biased. There's no dips when you're below the 50-day moving average. Again, just ask the people who were buying dips in January of 2022 when they were saying the first day under the 50-day moving average that the market was oversold. I haven't actually heard that this morning as well. When we were losing the 50-day moving average, we're oversold. There should be a bounce. Okay, right? So I do believe there is a shot that we do have a dead cat bounce tomorrow. Maybe 100, 150, 200 points on the NASDAQ. But now is the opposite, right? The same way you are buying dips in a light open in a bull market, you are rejecting, right? You are absolutely rejecting any type of spikes into a light volume open into supply. And the first rule, right? The first rule of trading in a bear market, and I don't want to use, actually, you know what? I don't want to use the word bear market. In a bear scenario, in a bear interval, you never, under any circumstances, buy the gap up the next day after technical damage. All you're doing is you're going to be buying stock into supply. All these stocks right now are below supply. If they gap back up, they're going to be trading into supply. You want to short that gap up. You don't want to buy that gap up. It's going to play out that way. If you're buying any type of gap up after technical damage, you're probably going to lose money in the first 30, 40 minutes, 90, 95% of the time. Is there a shot we gap and go on some crazy news? Absolutely. But again, when you are trading technical damage, the rule of thumb is you want to short the gap up. You do not want to buy it because if you're buying it into supply. And the whole point of the PS60 theory is buy stocks into support and short stocks into supply. And that's exactly what we are looking at here. If you look at all the other indexes, SPY is the next one up, right? SPY held. They held the 50-day moving average. Let me talk in terms of SPX, right? The SPX held this 54.20 level. Guys, if SPX loses 54.20, we're going lower. That's basically it, right? If we lose the 50-day moving average on the SPX, the 54.20 level, 54.19 level, we're going to go lower. Just the way the NASDAQ had a battleground area at 472 that they didn't even put up a fight. At least the SPX today bounced, right? Bounced off the 50-day moving average the first time around. So guys, watch this 54.19, 54.20 level for tomorrow. If they start losing this level, it's going to get hit. It's going to get absolutely hit. Again, that's the whole point of stocks going from supply to supply and demand to demand. We saw massive moves today. Massive technical damage in individual stocks. Tesla, forget about it. Absolutely imploded, right? Absolutely imploded. It looks like if tomorrow, if we could get any type of rally into this thing, I'd like to short some into daily supply. This daily supply is going to rise, but somewhere around this, 21, 22 area maybe. But if it starts taking down today's channel, we're looking at 212, 209 area, in that area. NVIDIA finally broke down today, right? We talked about the 50-day moving average on NVIDIA, right? Finally broke down, finally lost the 1650 level, traded all the way down to the 13s. Again, another stock, if it gaps up into tomorrow into supply, again, if you look at the 60-minute view, this is all supply. You notice how orderly it keeps on getting rejected on supply? All these irrelevant lines, right? It hits supply, gets faded. Hits supply, orange line, faded. 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 You get what I'm saying? So we're going to be looking for areas of desperation into supply. Look at Meta. Guys, look at Meta. Look at this channel, folks. Look at this channel. We're going all the way back to May 31st. If this channel loses in the next couple of days, again, like I said, there is a shot we have a dead cat bounce. We're down 3.5%, almost 4% on NASDAQ. But set an alert. If we start losing the May lows, this Meta, look at this chart, man. This thing is setting up absolutely aggressively. Look at Avago, right? Look at Avago. First close today below the 50-day moving average. We think that's a good thing. You want to be buying this thing on a dip, right? These are not good things. These are all technical damage areas that, again, they don't have to necessarily play out for tomorrow on a continuation. But the last thing you want to do is sit there and buy dips below the 50-day moving average. It's insane. Apple broke down today. Remember we talked about Apple in the last couple of days, right? It finally got below the 20-day moving average. Look at this move on Apple. You got a $7 move on Apple into the next support. Huge move. So look, there's a lot of technical damage. You can just go chart by chart. It doesn't matter. Look at SMCI. This thing closed. This whole major area is now in jeopardy, going all the way back to the April lows. So there's a lot of charts, folks. There's a lot of charts. And again, if you've been watching this broadcast from 2022, you kind of realize 85% of 2022, we were below the 50-day moving average. Within 85% of the price action, well, it was to the downside, and that's the whole point. Are we going to rally tomorrow, dead cat, to be determined? But I definitely have a plan for tomorrow's session into strength. I definitely want to be a seller into strength, and if they start losing today's channels, obviously there's a continuation that we can have. So I would love to see a gap up open. Okay, I really would. I would love to see a gap up open. And then we'll see, especially for all you guys who are in the webinar, we'll find the prices, we'll identify the supply zones, see where we want to fade these stocks for at least the open. But guys, the last thing you should do, I'm telling you as the day is long, if you've been watching this broadcast for years and years and years, I've been hosting the Access a Trader platform for nearly 15 years out of the 25 years that I've been trading. You kind of know when there's technical damage, the last thing you want to do is buy that gap up. It's going to be not good. So again, if you're a brand new trader, guys, just write this down. It's just data. It's not my opinion. I don't trade an opinion. I don't forecast. I don't fearmonger. I don't FOMO anybody. I'm just giving you data. You can trade on that data whatever you want, whatever your heart desires. I'm just giving you my point of view, right? My point of view for over a quarter of a century of clicking this damn mouse, making mistake after mistake after mistake after kind of figuring out what not to do. Okay. So, it's very, very important. Just write this down. Over the 50-day moving average on the daily, it's bullish. Risk on. Below the 50-day moving average on the daily, it's risk off or short bias. So what the bulls need to do in the next really quickly, right? Because the longer we build below, it's not going to be good. So the bulls need to get back above the 72 area, and the bears just need to continue to build a ceiling underneath. The longer it stays below, the higher probability the market goes lower. And you can see 457, 454 would be next near-term soft landing for the QQQs. But for all you guys who are trading on the SPX, guys, watch that 54.20 level. And held today perfectly the 50-day moving average. That is the ultimate line in the sand. You don't need to discuss with anybody. You don't need to have a poll on social media. You don't need to ask your friends. 54.20. That's it. 54.20 is the 50-day moving average. Like I said, guys, you're all adults. Whatever your time horizon is, if you're a shareholder, and I'm talking about your stock, and your whole point of view is, it doesn't really matter. I'm in it for 5-10 years. Fine, that's cool. Again, if you're in something for 5-10 years, my channel is probably doing nothing for you. Okay, we're strictly day to day to day, one trade at a time, one day at a time. But the rule of thumb is below the 50-day, not good. Above the 50-day, super bullish. The only thing that can really save the market for next week is, again, we really don't have any big earnings yet. IBM had a nice quarter. that's moving up moving up this afternoon. Chipotle really is a great company. It really is. I told my son, what do you think Chipotle's going to beat earnings tonight? He goes, Dad, what the hell are earnings? So I'd explain to him. But he said, I go, do you think the company's going to do well? He goes, Dad, I eat in Chipotle 4 days a week. There you go. So anyway, guys, have a great night, everybody. Tomorrow night, there is no video. It is my normal Thursday evening off to kind of clear the head. But again, we have our game plan. We have a very specific way of approaching a sell interval. And the most important part is we definitely do not want to buy strength. Guys, God bless everybody. Have a great night. And hopefully everybody does well. Take care, guys. Have a great night.